Over the last 12 months, one stock quietly went up almost 700%. Not a meme coin, not some tiny startup. A company that makes the memory chips sitting inside almost every AI server on the planet. That company is Micron. The ticker is MU. And while everyone was busy arguing about NVIDIA, Micron went from a beaten-down boom-and-bust chipmaker into one of the biggest winners of the entire AI boom. A $1.1 trillion company trading at a price-to-earnings ratio of just 22. So here's the question this whole video is going to answer. After a run like that, with earnings coming up on September 29th, is Micron still a buy or did you already miss it? Let's get into it. Welcome back to Long-Term Yield, the channel where we cut through the hype and ask one simple question. Is this actually a business worth owning? If you like deep dives that give you both the bull case and the risks, not just hype, do me a favor and hit subscribe. It genuinely helps. Quick disclaimer, I'm not a financial advisor, and nothing in this video is financial advice. This is research and education. You are responsible for your own money. Cool? Let's talk Micron. Let's set the stage. Micron Technology trades around $984 a share. Its market cap just crossed $1.1 trillion. And the one-year chart is almost comical, up nearly 695%. Year-to-date, it's up about 245%. Look at that 52-week range for a second. A low of $103, a high of over $1,255 in 1 year. That tells you two things. One, the market has completely re-rated this company. And two, this stock moves. Its beta is 2.14, meaning it swings roughly twice as hard as the overall market. So why did this happen? Why did a company that lost almost $6 billion back in 2023 suddenly become a trillion-dollar giant? One answer, artificial intelligence needs memory, a lot of memory, and Micron is one of only 3 companies on Earth that can supply it. Let me explain. Micron makes memory and storage chips. If NVIDIA makes the brain of AI, the GPU, Micron makes the short-term memory that brain needs to think. There are 2 main products. First, DRAM. This is the fast-working memory computers use to hold data they're actively using. Micron is one of the big 3 DRAM makers in the world, with roughly 22 to 23% global market share. Second, NAND flash. That's the storage, the chips that hold your data even when the power's off. But here's the product that changed everything. HBM, high bandwidth memory. This is a special, stacked, ultra-fast type of DRAM that sits right next to an AI GPU and feeds it data. Every NVIDIA AI accelerator needs a stack of this stuff wrapped around it. Without HBM, the most expensive GPU in the world just sits there, starving for data. And demand for HBM is exploding because every AI chip needs more of it. And it's incredibly hard to make. Micron holds around 21% of the HBM market, competing with SK Hynix and Samsung. Micron organizes all of this into 4 business units. A cloud memory unit focused on HBM and memory for the big hyperscale cloud customers, a core data center unit, a mobile and client unit for phones and PCs, and an automotive and embedded unit. But make no mistake, the story right now is the data center. That's where the AI money is flowing. Here's the simplest way to think about it. In a gold rush, you can try to find the gold, or you can sell the picks and shovels. Micron is selling memory picks and shovels to the entire AI industry. So let's talk about the thing driving this entire story, what people are calling the AI memory supercycle. For years, memory was a brutal business. Prices went up, everyone built too many factories. Prices crashed, everyone lost money. Boom and bust over and over. That's why Micron lost money in 2023. But AI broke the cycle, at least for now. Training and running AI models needs enormous amounts of high bandwidth memory, and that demand showed up faster than the industry could build supply. When demand massively outstrips supply, one thing happens. Prices go up. A lot. Look at what that did to Micron's gross margin. The 5-year average gross margin for this company was about 28%. Today, it's 72.6%. That is a staggering jump. And it's almost entirely because the AI memory is in short supply and Micron can charge premium prices for it. Even better for the bulls, a lot of that HBM capacity is sold out well in advance, locked into multi-year agreements with the biggest customers in tech. That gives Micron something it almost never had before: visibility. For a company that used to be a total roller coaster, having big chunks of future demand already spoken for is a genuine change. That's the bull thesis in one line. AI needs memory, memory is scarce, Micron sells memory, and it's finally getting paid like a premium business instead of a commodity one. Now let's look at the actual numbers, because this is where it gets wild. Revenue. Over the trailing 12 months, Micron did about $90.3 billion in sales. 1 year ago, that figure was far lower. Revenue grew roughly 167% year over year. That is not a typo. Triple-digit revenue growth from a company this size is almost unheard of. Profitability. Operating income of over $59 billion. Net income of $50.5 billion. Operating margin around 66%. Net margin around 56%. Remember, 5 years ago, the average net margin was in the single digits. This company is printing cash right now. Speaking of cash, free cash flow over the trailing 12 months was about $26 billion, and operating cash flow was over $51 billion. Returns on capital. This is my favorite quality check. Return on equity is 66.6%. Return on invested capital is 58.4%. Those are elite, best-in-class numbers. Every dollar Micron is putting to work right now is generating enormous returns. And the balance sheet is a fortress. Total debt is around $3 billion against tens of billions in cash. Micron is basically in a net cash position. Its debt to EBITDA is 0.08. The Altman Z-score, which measures bankruptcy risk, is 22.3. Anything over 3 is considered very safe, so this is off the charts. The Piotrowski F-score, a 9-point health check, is 8 out of 9. One quick note for income investors. Micron does pay a dividend, but it's tiny, about 53 cents a year, a yield of basically nothing. You are not buying this for income. You are buying it for growth and capital appreciation. Bottom line on the financials: record revenue, record margins, gushing cash, elite returns, and almost no debt. On the numbers alone, right now, this is one of the strongest financial profiles in the entire market. Okay, so it's growing like crazy and printing money, but is it expensive? This is where Micron gets really interesting. Micron trades at about 22 times trailing earnings. For context, let's line it up against the other big AI and semiconductor names. NVIDIA trades around 372 times earnings, AMD around 170, Broadcom around 60, Taiwan Semiconductor around 36, and Micron, 22. It is, by trailing earnings, the cheapest major stock in the entire AI hardware trade. But here's the number that really gets the bulls excited. Look at the forward price-to-earnings ratio. That's the price divided by next year's expected earnings. Analysts expect Micron's earnings per share to jump from about $44 this year toward $150 next year. At that level, the forward PE is around 6.5. 6.5 times earnings, for a company projected to keep growing earnings around 100% a year. The PE-EG ratio, which compares valuation to growth, is 0.22. As a rough rule, a peg under 1 is considered attractive. Micron's is 0.22. On a growth-adjusted basis, it looks almost absurdly cheap. Now, I have to be straight with you, because this is where a good analyst earns their keep. Not every model agrees. Some longer-term intrinsic value models are more cautious, because they assume today's sky-high memory prices eventually cool off. If you plug in normal memory margins instead of these AI boom margins, the picture looks more expensive. So the entire bull case rests on one question: how long does this AI memory boom last? Which brings us to the single most important thing you need to understand about this company. Here's the honest part. Micron does not have what investors call a moat. In plain English, a moat is a durable, structural advantage that protects a company's profits for a decade or more. And the memory business, by its nature, doesn't really have one. Memory chips are largely interchangeable. A gigabyte of DRAM from Micron does the same job as a gigabyte from Samsung or SK Hynix. The industry is famously cyclical. When times are good, everyone expands, supply floods the market, and prices crash. You don't have to imagine what a downturn looks like. Just look back to 2023, when Micron lost almost $6 billion in a single year and margins went negative. That is the other side of this business. So today's incredible margins are, at least partly, a cyclical peak, not a permanent feature. That's the risk, and you should respect it, not ignore it. But, and this is the heart of the bull case, a lot of smart investors believe this cycle is different for two reasons. First, the industry has consolidated to just three real players who are being far more disciplined about supply than they used to be. And second, AI demand isn't a fad. It's a structural multi-year build-out, and HBM in particular is sold out well into the future. If that's right, Micron's profits could stay elevated for years, not months. So the debate isn't really, is Micron a good business today? Clearly, the numbers are spectacular. The debate is, how durable is it? A bull says AI has permanently changed the memory cycle. A bear says a cycle is a cycle, and this too shall pass. Where you land on that question is basically your whole investment thesis. Which brings us to the near-term catalyst. Micron reports earnings on September 29th, and for a stock this hot, that report matters. Here's what I'll be watching, and what you should watch too. Number 1, HBM. Is high bandwidth memory demand still accelerating? Is capacity still sold out? Any comment on next year's HBM being locked up is extremely bullish. Number 2, pricing and margins. Are DRAM prices still climbing? And is that 70% plus gross margin holding or even expanding? The whole thesis lives and dies on pricing. Number 3, guidance. What does management say about the next few quarters? With a stock up almost 700%, expectations are sky high. So guidance can move this thing 10% in a day, in either direction. If Micron delivers on all three, the AI supercycle is real and durable story gets a lot stronger. If they stumble or sound cautious, expect volatility. Remember, this stock swings twice as hard as the market. So let's bring it all together. The long-term yield verdict on Micron. What we have here is a company firing on every cylinder. Record revenue up triple digits, record margins, elite returns on capital, a fortress balance sheet, and it's the single cheapest way to play the AI hardware boom on a price-to-earnings basis. The forward multiple of around 6.5 against 100% projected growth is the kind of number that makes value investors and growth investors agree for once. The catch, and it's a real one, is that this is still a cyclical, no-moat business, and today's numbers reflect a red-hot peak. The entire question is whether AI has made that peak durable. Here's how I'd frame it for a long-term investor. If you believe the AI build-out is a multi-year structural shift and that memory is the scarce, essential ingredient underneath it, then Micron might be one of the most mispriced ways to play it, and the September 29th earnings report could be the next catalyst higher. If you're not sure the cycle will hold, then you respect that risk, you size your position accordingly, and you let the company keep proving it. Either way, this is no longer the sleepy memory stock it used to be. Micron has become a core AI infrastructure company, and the market is only just starting to treat it like one. That's my full breakdown of Micron. If this helped you understand the stock, smash that like button. It really does help the channel. And tell me in the comments, are you buying Micron before September 29th or waiting? I read every comment. If you want more deep dives like this, subscribe and hit the bell so you don't miss the next one. As always, invest for the long term, think for yourself, and I'll see you in the next video.